Hi everyone, this is Will, aka Dr. Financial Literacy. Hoping you're having a wonderful day today. This is day 17 and using velocity banking bi-weekly to improve my debt and credit situation. With bi-weekly paychecks, I've been taking my bi-weekly paycheck for close to 1,700 and placing them on my debt to improve credit. So then starting off today, as normal, it is what it is, but it will become what you make of it. So what have I made of my salary of $3,390 in California? Well, let's look at it. Okay, so my income monthly, 3,390. My expenses are approximately $3,000. From there, I have a cash flow of $390 per month. So what am I doing with that $390 per month? Now it's positive now, but when I started Velocity Banking in December, I was at a negative cash flow. Okay, so my total debt when I started in 2023, 2023 was approximately $350,000. This included $157,000 in educational loans, $144,000 in three mortgages, other loans obligations of $30,000, and approximately $20,000 in credit cards. So a total of about $351,000 that I initially started Velocity Banking, the concepts and dealing with it in December of 2023. At the present time, because I've been able to reduce my debt and I'm in a better position, I'm close to getting a HELOC, a home equity line of credit, which would act like a credit card revolving. And this is what I initially wanted to start with in 2023 and trying to pay down my three mortgages, but I was unsuccessful in obtaining it because of the debt load that I was carrying. Once I guess found velocity banking as one concept, I started engaging in that in general. So of the $50,000, if I'm able to receive it and it's still an ongoing process, I plan to wipe out hopefully $48,000 in debt. This would include about $13,000 in credit cards, one of my three mortgages at $28,000, a auto loan at $6,200, and other debt at about $800. So in getting this $50,000 loan at the closing costs and other things, I hope to wipe out $48,000 in debt and having it on the home equity line of credit. And that's been made possible by other strategies that I've used in addition to velocity banking. One is just living frugally. I used to enjoy going to Goodwill, Salvation Army, and picking up some things and shopping, but I had to cut back on those things. I didn't have to cut back, but I decided to pull back just in general a little bit so that I can put more money into velocity banking to free up cash flow. Now, in continuing the home equity line of credit that, again, hopefully that I can receive, in closing it, there's going to be $1,719 in points. And points are, I think, things that they say can be used to bring down the interest rates, and that helps the investor get more of their money on the front end. So you can choose to go with points or not go with points. When I started the process, it seemed like it was automatically in the documents that they added points to give me the interest rate that they were getting. But I'm going back and maybe seeing if I can negotiate it, because with velocity banking, the interest rate may not matter as much. So maybe I can reduce my costs, take a higher interest rate on the HELOC, and just continue to dump my paycheck in, just like I've done with the credit cards, and they were at 20 and 30%, and I came down significantly. So the points help you, or supposedly help you, get a better and lower interest rates. Right now it's at 17. I may just go along with it just to get this process over and to start with the $50,000 HELOC because Lord knows I've been trying for a while just to secure a HELOC. The estimated closing cost would be $624. When I looked at some earlier ones, I was in the thousands of dollars in closing costs. But with this particular lender, they allow me to do pictures and upload the pictures. They have a system of estimating. So it's really going a long way to reduce the closing costs. And hopefully as it goes further along, I will let you know. The debts to be paid off on this particular HELOC, this is one of 3 HELOCs that I'm trying to get on my 3 mortgages. For this particular one, no debts at all will be paid off. So the cash at hand on closing would be $47,658. That's what I will start my HELOC from in general. So once I have this, and I'm saying 48,000 in debt, because by the time I get this, potentially, some of my mortgages would have been paid in general. That will bring down some of the money. Some of my credit cards have been made, the auto loan payment, and then other debts. So I should have about $48,000 that I will pull under here. Now the monthly payment on this HELOC will be $434 a month, interest only. So for the first 10 years, according to the contract, I'll be only paying interest. Now, that interest rate for the first 10, no, I'm not going to say the first 10 years. The interest rate for HELOCs have a low ceiling and a high ceiling. And I think the particular high ceiling for this is, I'm sorry, the low ceiling is maybe 4%. So that's the lowest that it can go. The highest that it can go is 18%. So I factored in 18% HELOC versus a 10%. So I'm already, in theory, covered. The only real risk that goes along with this, if I lose my W-2 income. That's the main risk that I see, losing your W-2 income. And because we are in a capitalist society where the vast majority of people work for a W-2 job, that is your main risk. When employers are not necessarily, I think, making a profit, labor is the most expensive aspect of any business. And I'm not going to get off on the tangent, but just look around and look at some of the changes and how labor is being pulled back. More recently, even here where I'm at, some of the school systems have started to reduce staff, and unfortunately, well, they've reduced staff, unfortunately, and it starts kind of like at the bottom, the lower income individuals that are already trying to make it. So it's going to be a 30-year HELOC. 10 years, or the first 10 years, will be interest only, no principal. I would just be paying interest only. And again, that interest can go as high as 18%. And I'm prepared to pay 18% because I have budgeted into my expenses. Again, I live frugally. I try to live below my means, so I'm well within the 18% if it rises. So that's 18%. Credit cards that I have paid down so far with Velocity Banking have ranged from 25% to 32%. So the 18%, child's play. This $434 a month will save me probably about $600 a month in what I'm paying in these debts. I calculated it in an earlier video at 1,077. So the earlier debts monthly that I'm looking at is probably 1,077. So with this new payment and consolidated items, 1077 minus a new payment of 434. That's going to free up $643 in capital from my income. So I'll be gaining a cash flow of $634. So what am I going to do with that $634? Well, it is what it is, but it will become what I make of it. That's going to go back into this whole system to pay down my debt. Hopefully, I will maybe do some traveling, vacation, maybe eating out. But again, this will bring back in, and I most likely will most likely target these two outstanding debts of $157,000 in education expenses and 144. Well, it's going to be less than that, then be left with 3 mortgages, because 1 mortgage will be paid off here. All right. So again, thank you very much. I just wanted to stop by and give you that little information as I continue with day 17 of the bi-weekly velocity banking. I've been doing velocity banking in January and February. Was just doing a whole paycheck in. Didn't do it from a bi-weekly perspective. So I just wanted to show that when I did do it from a bi-weekly perspective, in February, I was able to have $190 in cash flow. I rolled that over into March. So in addition to my $33.90, I also had $190 for that particular month, and hopefully it'll keep rolling on. So as in general, really encourage you to look at velocity banking, look at the principles, look at the concept. I think it's an easy process to start. You can start from a negative cash flow. I started from a negative cash flow in velocity banking, and the only thing that I did differently was simply stop putting the majority of my income into a bank or sitting on a checking account, and I just started selecting one of these various credit cards that had balances and just paid on it monthly. I put a few bills on it, and that was it. It wasn't complex. It wasn't overly stressful. I just stopped letting the money sit in a checking account, and then just put it on a one of the credit cards, and then paid those bills from the credit card, which basically brought down the average daily balance and what I paid in interest. Very easy move. Probably took me 5 or 10 minutes just to start that process. Okay, so thank you very much again for watching this video on velocity banking, particularly bi-weekly section. I'm gonna flesh out this year part of it and start doing days and weeks and months in terms of a HELOC to show how a HELOC can be used to increase cash flow. All right, thank you very much, everyone, for stopping by. Have a great day.